All right, highlight today. If something happens and it should move the market one way and it doesn't, then look out for the other way. What do I mean by that? 7:30 Central, we had CPI. Well, number one, you have to know CPI is a number that gauges inflation. It's indexed to how inflation, consumer price index, and how much more consumers are paying month over month. And so this number missed by an above average miss. 0.3 was the expectation, and the print was like 0.6. And then the X food and energy also missed. I think this was 0.2 and 0.5 was the print. Either way, they both missed to the upside, which is generally means inflation's upticking. And that generally means that's bad for stocks. When you get inflation to be a problem, and again, this is just 1 month worth of data, but when you get inflation to be a problem, that's catastrophic for economic growth because you got too many dollars chasing too few goods and services. Now, some of you people out there might be saying, well, of course that's going to happen with all the money that they're pouring in. And eventually that could happen, right? But for over 10 years, we've had quantitative easing and they haven't had runaway inflation. If you remember February of 2018, if you look back at February 2018, the charts look like this. They got crazy. And it was the first time, it only lasted a couple months, that the markets were afraid or worried about inflation. But I'm bringing this up now because we couldn't go lower or stay lower. Look at right in here. Look at this area right there. That's around 730. We go down and actually rally on a number that could be a little bearish. Then the second thing happened in, where was it? And it wasn't as big of a deal necessarily, but it was a little bit in here. It was just the concept of bad news and you can't go down. The Texas positivity rate jumped to 23%, state record. You would think, well, that's bearish. I did until I seen it not be able to go down. It started running up. It was right in there. So you take the CPI that's negative and bearish, can't go down. You take some more bad news, and that's when we started saying in here, it could be one of these sessions that just creep, grind, and beach ball underwater is a phrase I like to use when I get that sense that nothing could really keep us from rallying, just like it's hard to keep a beach ball underwater. So that's where the price is. Now, yesterday afternoon, we had a lot of volatility jump in and a sell-off, kind of a big reversal, and they attribute it to McConnell's comments that there wouldn't be a stimulus soon. But I think it was an Apple lawsuit at first that kicked things lower. Now, we've retraced all of that weakness and then some in less than an overnight session. They've got the overnight highs within about 20, 25 points in this SEP contract in the S&P minis. Now, those that are traders and know this could see and realize the NASDAQ is making all-time highs. They're to and through their February 22nd area. The Dow and the S&P have gotten back their entire, essentially, weakness and sell-off when they priced in the pandemic in mid to late February is when they started doing that. So, again, the highlight, to summarize this highlight, is when you get negative news and price doesn't do what it's supposed to do, look out the other way. Those are really good clues and head scratchers. And it's almost like a tell. If you're a detective, you're interviewing a suspect, and every time he lies, he does something, then you set up your questions to find out where and when he's going to lie. When is the market not lying to you, but the news is lying to you? You get negative news, you can't stay down. All right. And that's what's important. Then we also talked about transitional moments. Here we had a market that went up and that came down fast. And like right in here was the beginning of maybe some downside. But same thing. If you think that you're just going to stay on the short side all day long, you could be in trouble. Close your eyes and open them up. We're trading all-time highs in this SEP contract. The thing about, and I said this, I think, before I started recording, is the key to trading is not necessarily, I'm listening to trade the news as I'm talking. The key to trading is certainly knowing your setup, certainly taking just trades you're supposed to take, but knowing what to do when you're wrong, because those are losing trades. If you screw up every time the market doesn't do what it's supposed to do in a setup, or a lot, or sometimes, that's when you get that big hole in your account or in your ego. So it's what to do when you get a losing trade. Does your plan change when it starts to do the opposite of what you thought? Or like yesterday, and I was glad that nobody, from what I heard, got into this trouble in the room, and that was slow day, slow day, slow day, wham, break 50 points. And sometimes all it takes is for you to take one long trade. Let's say the market's not doing anything, and then it starts going down, and it eventually goes down 50 points. But you took a long trade in there, and you maybe even took a small loser. But because you took a long trade, if that all of a sudden leans you to being and staying bullish, even though you got out of the long trade, you're in trouble. Your previous trade doesn't and shouldn't necessarily make you want to do the same thing again or from the same side of the market. Sometimes it could, but if there's a reset button to press, make sure you press it. Move on. That trade's over with. You already went on a date with her. You had fun. She ain't calling you back, and you ain't calling her back. Move on.